Hi, this is Professor Cataldo, and I'm going to give you a nice little framework that summarizes managerial accounting topics on a single page. So this is something that you would refer to after you've completed your introductory managerial accounting course. That's usually taken, depends on the institution, probably in your sophomore year if you're an undergraduate business major. I'm going to start from the top left. So on the left-hand side of that vertical axis, these are the methods that are used for external use. They're required by the Internal Revenue Service and under US GAAP. It's referred to as absorption costing, and it's referred to as full costing. So I have a legend at the bottom in case any of the acronyms trip you up. So going straight down, total. I got the sales less the cost of goods sold equals the gross profit. Gross margin is probably a misnomer. I should have used gross profit. Less operating expenses equals net operating income. Very basic US GAAP framework. Move to the left. On a per unit basis, I take the price per unit, sales price per unit, less cost of goods sold per unit. I'm going to come up with a gross profit. Moving still further to the left, those are my product costs: direct material, direct labor, manufacturing overhead. Moving still further to the left, prime costs are direct material and direct labor. Prime is short for primary. Conversion costs, those are the costs associated with converting direct material, or more specifically and more precisely, raw material, which is most of your direct material. Remember, direct material is or raw material rather, is both direct material and indirect material. So again, to the left, conversion costs is your direct labor plus overhead, which I use to convert a raw material into a finished good. Now I'm going to start at the top and do the right-hand side. This is the cost behavioral side, which is more than 50% of your introductory managerial or cost accounting course. This is used for internal decision making. It's called the contribution approach by some authors. It's called direct costing by others. It's called variable costing by most or all. Now it's slightly different as I go straight down. So I've got my sales less my variable cost equals my contribution margin, less my fixed cost equals my net operating income. Moving still further to the right, there's the per unit. Sale price per unit less variable cost per unit equals contribution margin per unit. Still further to the right. Now I'm looking at only product costs, where the purely variable are my direct material, my direct labor, and my variable cost component of overhead. Also, if you look down with the solid line, non-product costs, we've got the operating costs that are variable. So, variable costs, direct material, direct labor, the variable portion of manufacturing overhead, and the variable portion of non-product costs or operating expenses. Go down a little further. You've got the broken line. My fixed costs, that's the fixed cost component of manufacturing overhead and the fixed cost component of non-product costs or operating expenses. So I've done the far left, the far right at the top. It's going to go straight down. Net operating income will be equal under both of these methods, the left and the right, if there is no beginning inventory and no ending inventory. Moving to the left, that area or that material is typically covered in a single chapter, several chapters into the course. So right below, net operating income will be equal if there's no beginning inventory and no ending inventory. Right below that, if no beginning inventory but some ending inventory, the net operating income difference will equal the fixed cost component of overhead per unit multiplied by ending inventory in terms of units. That's why that's called absorption costing on the left. Okay. Down below that, left-hand side first. So this is the US GAAP on the left side. Job order costing is US GAAP. Process costing. Some schools skip coverage of that in your introductory course. That's US GAAP. Standard costing is US GAAP. A lot of schools skip the journal entries for the favorable and unfavorable variances that get closed out at the end of each month or each period. Also on the left, still going down, cash budgeting and forecasting. That's where you do the cash budget. It's usually around Chapter 8 of an introductory course, Chapter 7, Chapter 8. And that's where you do your cash, beginning cash balance, your cash inflows, your cash outflows, ending cash balance. And you usually do it for a couple months, 3 months, or a full quarter, or you do it for quarters. It depends on the textbook. Down another step, net present value. Its net present value is US GAAP, but the depreciation they use MACRS, or Modified Accelerated Cost Recovery System, which is a tax basis and very closely associated for 3, 5, 7-year assets with double declining balance, except there's a first-year, half-year modifying convention under MACRS. And down below that, your statement of cash flows. Let's do the right-hand side. That's cost, volume, profit analysis. We're looking at cost behavior, and that includes activity-based costing, which became popular with a paper published in 1989, very popular in the 1990s. So we're going back about 3 decades. Under ABC, all you really do is assume that all costs are variable and no costs are sunk. Very long-term perspective. Also on the right-hand side is transfer pricing. That's usually touched on a little bit in an introductory course, a little bit more in an intermediate course, maybe a little bit in an advanced financial accounting course, and in a Master's of Accounting program, you might have an entire course on transfer pricing, but it would be rare. Down below, I have all the acronyms. Once again, if you have not yet completed Introductory Managerial Accounting, you could probably use this as a list to check off as you proceed through the course, but this is not going to make sense to you until after you've completed that course. After you've completed that course, this is a nice, handy little reference sheet of paper that you can print out, and I hope that it is helpful to you. Thank you.